Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US Market Update. Well, on Sunday night when I talked to you, we talked about how the futures were down 50 handles and we wondered how the market was going to react to, and if it was going to react in a negative way to the ongoing news of the coronavirus with the spreading, etc. And boy, reacted it has. I'm sure you're, unless your head's been under a rock, you're aware of what's gone on. When we did the outlook, the 2020 outlook based on Elliott Wave levels and patterns, we talked about not just upside targets, but some corrective targets as well. So I thought I would come back and share those with you and show you where this thing may settle down before we can find a little bit of footing. In fact, at the time of this recording, there's been the first reported transference, communal transference, they're calling it, in the U.S., and that sent the futures down again. They've recovered some, but we may hit some of those target levels tomorrow. But let's take a look at the charts, and I'll show you what I mean. On your screen is a chart of the S&P that was showed during that outlook that I mentioned in the intro, our 2020 outlook based on Elliott Wave. And you can see the green, purple, and red numbers of 346 there. There's three different Elliott Wave patterns. Remember, there are corrective patterns in addition to the 5-wave patterns, and you can do weekly charts, etc. They all gave us the 346 target, which is certainly going to be resistance when it gets there. We almost got there. We got to 340, which is pretty doggone close, but usually these levels actually get hit. Close is not usually good enough. They usually actually get touched. But what we showed here was a potential of moving to the downside and coming back to this 100% extension as a point of potential support and then move back higher. Well, look where that level is, 314. I'm going to show you where the market is here in a second, but basically, if you're following the market, you know, that's pretty much where we are right now. So we've hit that level. But then again, in the intro, I mentioned that we had more bad news today with that transfer of the virus here in the U.S., and the futures are down again. So we may be coming down to this 303 level. You can see it over on the right-hand side there. Which would be the 61.8% fib extension, which also marks the high of the big A wave in this zigzag pattern going back to July of last year. That would be major support. That would be kind of a, back up the truck type of a position if we were to get down there. But we might make it. I wouldn't have thought it, but who would have thought the market would react this way to the coronavirus? Interesting thing today that I wanted to share with you before we move on. Jeffrey Gundlach, who's one of the, I talk about this a lot. There's a few people, quite often I watch CNBC or the financial networks with the sound off because there's just too many people that come on with ulterior motives when they're talking about their own investment companies, etc. But there's a few people that when they come on, I really like to listen to what they have to say. He's one of them. And he mentioned that he didn't actually think the market was reacting so poorly to the coronavirus. He thought that it was more along the lines of Bernie Sanders and the support he's gathering in these Democratic primaries already. But I think if you watch the market intraday, not to disagree with somebody as intelligent as he is, but the market really has moved with the news events. Last night we had a report from China that the number of new cases had slowed. Boom, futures were up. Dow moves up 480 points early in trade. Then we come out with another report that there's a new case in Brazil. The cases in Italy have tripled. Bad news. Boom. That higher 400 point plus move in the Dow's gone. We go back down to zero. We rebound, back up over 200 points on the Dow, and then we get the news that there's 10 people quarantined in New York. Not confirmed cases, just quarantine under caution, and boom, down we go again. We finish to the downside. So the market really reacted to the news of the coronavirus. So I really think this is what's going on here. Now we could then come back to that 332 level. These were just projections of potential patterns and likely movements. And then that 362 level is the 261.8% fib extension on the market. So those are things that we shared with you could happen. And it has. We're there. We're at this 100% level. Now the question is, will we hold here? And here's what I wanted to show you with the current chart of the market. Is the fact that we've had, look at this, massive volume on these down days, which you would expect. So there we are right in that 314 level, right in here, and there's this big volume. Now the reason the big volume is important, obviously, is when you get this kind of selling, at some point the sellers get exhausted. We've positioned ourselves for a bounce Now this kind of damage is going to take some time. This is likely not going to be a V bottom. It could be, maybe it will be, and we go back. But usually when you have this kind of damage, we go through some backing and filling. Now what we're looking for is just a bounce, an oversold bounce, because when we look at the moving averages, and there's that rule coming to play again, no security in any time frame gets very far away from the 10-day moving average, and you can see we are well away from it. So we're just looking for about a 50% bounce here, get back to the moving averages, close up this oversold condition, and then the market may come down and test these levels a couple times, and we may come down. Here's that level again right there around 303, which again coincides with these highs that we've had, not just in July but in September as well, and a little bit of support there in October. So we may be going down there if the futures stay low. There's a lot of time between now and when the market opens tomorrow morning, but I wanted to share those with you. And when you get this kind of volume, you do get to a point of seller exhaustion, at least for a short period of time, and that's where that bounce could come in. When you get these big hard down moves, it doesn't take a lot to get a big spring back to the upside. Could be short-lived, but that's usually what happens. So I wanted to come back and share these levels with you so you had an idea of what to look for in the market. So in general, if we don't hold here, we're probably going down to 303, and then that should be a pretty good level of support. If not, then Katie bar the door, gets really ugly from there. So let's hope that doesn't happen. But that's it. That's an update. Hope you found that informative. Please give us a like. Look forward to talking to you again soon. Take care, everybody.